Right, let's turn our attention to real estate now. Embassy REIT wrapping up a FY25 on a strong note with revenue and net operating income, each growing 10% to a record high and delivering better than expected distributions. India's first listed REIT and one of the biggest players in Asia's office REIT space, Embassy signed nearly 100 deals last year, leasing 6.6 million square feet. Companies eyeing double-digit distribution growth in FY26 and is on the lookout for new acquisition opportunities to fuel expansion. Let's bring in Ritwik Bhattacharjee now, who is the CEO of Embassy REIT. Ritwik, great to have you on the programme. Just give us your thoughts on the outlook. 2024 broadly saw office rents surge by a record 4 to 8% in India's top cities. For Embassy, do you think 2025 will surpass that, or should we expect some markets to underperform given the state that we're in terms of global economic uncertainty?
Good morning, Sri, and thank you very much for having me on the show.
Our pleasure.
First of all, let me just say that we are delighted with our performance this last year. As you said, we grew revenue 10%, and NOI 10%, but most importantly, we grew our distributions for the first time in 6 years by 8%, and we are projecting double-digit growth in FY26. And that's really predicated on the fact that Indian office right now has never been in a stronger place. I think coming back from the pandemic, like you said, rents have grown in markets. We're probably looking at sort of single-digit rents, but what we capitalize on and our strength at Embassy is that we have access to the best properties in India's best micro markets. Last year was a record absorption year, actually, 75 million square feet across India. That's supposed to grow 10% this year, and that's anchored by the GCCs and the global companies that continue to look at India as a hotbed of talent and with the world-class real estate that companies like ours provide. So I am extremely confident in our ability to capitalize on that, which is why we're giving the guidance that we are. We're thinking about revenue growing in the double digits as well as NOI and distributions at the midpoint coming in at 10%. So a lot to look forward to, and we couldn't be happy with the results that we have right now.
Ritwik, what then does that mean for current yield and projected growth rates, let's say over a 5-year time frame? And just elaborate for us and give us a bit more colour on the outlook for dividend and distributions. And is that picture going to be intact? And is it set for growth despite all the uncertainty?
As I mentioned, we delivered 8% growth for the first time in our history, and I think that sets a very constructive framework for us to deliver the double-digit growth that we've been promising investors, and investors have been waiting for. That's anchored effectively by the portfolio that is currently running at 91% by value, that at some point over the next year will rise to around 94% by value. On the back of that, we have around 6 million square feet of development in India's best office markets. That's also going to come online. That's 18% yield on cost. That is going to give you close to 30% sort of NOI CAGR growth. And on top of that, that should all drive down, if you look at the way we've been able to finance our business at the most attractive rates of capital, should definitely translate to double-digit distribution growth year on year, which frankly has been a long time coming. If you think about the fact that this has been a new product in India, there has been a lot of interest costs that we've had to bear to actually finance this business. We are now bearing the fruit of this development, of the growth, and we feel very comfortable about the distribution growth going forward.
You've got a lot of a very impressive portfolio of global firms who are tenants, Ritwik. Do you think global firms are increasingly looking at India as a strategic office location, and particularly evident in technology and finance? Is that set to continue at perhaps even a faster pace, given the narrative surrounding tariffs, and given in the past few weeks we've been hearing some whispers of Tesla looking to enter India, Apple shifting iPhone assembly to India from China, and of course, if and when they do come, they will need to lease office space?
Oh, undoubtedly, Sri. India is such a fertile hunting ground for global companies right now. And yes, there is a little bit of uncertainty around the tariffs. But again, it's the administration shown that it's open to negotiation. And it doesn't mask the bigger picture that India remains incredibly attractive for global companies. If you look at our largest tenant, that's JP Morgan, and the world's largest bank is doing some incredible work in our portfolio across its entire line of business. We've got companies like Novo Nordisk that's doing some stellar R&D work in our business. And I think we are very well diversified in terms of geography, in terms of location. And I think, short-term blips like tariffs will obviously cause uncertainty and a fair amount of angst in the market. But it doesn't take away from the fundamental fact that India and portfolios like ours are such attractive destinations because of the talent, because of the readiness of the population that's willing to work, do some cutting edge stuff in technology, in financial services. And it's a population that's young, that's hungry, that's eager to work. And if you look at the kind of real estate that we provide them, it's not a surprise that we are seeing the levels of absorption and the conversations we're having with global captives the world over.
Ritwik, we'll get into Tier 2 and Tier 3 cities and the opportunity there, but in the premium office space segment, I hear that's intensifying, especially in Mumbai, BKC, and again, there are reports that Tesla is picking up office space in that vicinity. Delhi CBD, Connaught Place, that's also in demand. Can you give us a sense of where that leaves the per square foot monthly rentals, and what sort of upside are you seeing?
That's a great question. We own a marquee asset in BKC that is rented out to one of the big technology majors. And this is obviously a market that's premium, that has the world's best companies that really are willing to pay the premium rents. I think it sort of depends primarily on the location that you're in. In Bangalore, for example, at some point in time, you run out of space. And clearly in these micro markets, then you've got to think about either adjusting your rents or thinking about new supply coming in. In Bangalore, for example, we own the best assets in micro markets where simply we are the market. And what we do is we are able to control rents because we have the ability to charge a premium, and all the companies that are coming in there for the talent that you get in a 100-acre park that's totaling 15 million square feet like Embassy Manyata, we get to actually charge a premium on rents because it is simply the best and the only game in town. You think about the talent that's available. You've got 100,000 people working in that park, the likes of Novo Nordisk. You've got your big companies, your Lowe's of the world, everyone sitting in there. That's a hotbed of activity. So
yes,
the rent at this point in time in a country like India is really just one very small factor. What they look for is the talent and the ability to retain that talent.
Is there opportunity in Tier 2 and Tier 3 cities?
Over time, there is opportunity in Tier 2 and Tier 3 cities, but what we see right now as a pattern is a lot of people migrate towards cities like Bangalore, where there's ample opportunities both professionally. It's a great education environment. It's a lifestyle where you can interact with a lot of people your age. You're looking at a young workforce looking for opportunity. And I think that's where the capital comes as well. If you look at why the big companies like your JP Morgans, your Swiss Re's, your Novo Nordisks of the world are in India, they come to Bangalore. Bangalore is India's largest office market. It's a 240 million square feet market on an 800 million office stock. These are the bigger markets that over the next few years will continue to dominate the office supply game and where most of the action is going to take place. But yes, over time, you will obviously see development percolate down into Tier 2 and Tier 3 cities in India as well.
Understood. Ritwik, Embassy does have a hospitality flavour within the broader portfolio, which comprises 4 operational hotels, business hotels, 2 under construction hotels. Do you fear demand could be at risk? And do you foresee any softening in the hospitality space, given the recent deterioration in Indo-Pak relations and the terrible Pahalgam attacks?
Yeah, first of all, our thoughts with everyone affected by this horrific tragedy. It's something that really puts a lot in perspective. So our hearts really go out to everyone on that. We have not seen any major impact on our business as a result of this. And I think, we operate a business hotel segment that's, highly in demand and is doing very well. We did 250 crores in EBITDA. That was up 25% last year, and occupancy and every RevPAR and ADRs are all on the upswing quite significantly. We don't see any sort of major impact to our business because they are attached to our parks. The hotel markets around us tend to be incredibly underpenetrated. And I think there is a clear need for the businesses to make sure that they have the ability for their executives to stay in hotels, to have the accommodations that they need, alongside sort of the infrastructure like assets that we have. We obviously don't operate in the luxury segment, but I think by all the accounts that I'm also hearing at this point in time, business continues to boom. And, if you go to cities like Mumbai and Delhi at this point in time, you don't really see much. It's very hard to get a room at this point sometimes.
Interesting. Thank you for addressing that sensitive point, Ritwik. In terms of future opportunities, given the huge growth that we've been seeing in quick commerce, are there opportunities for Embassy REIT to get into logistics, warehousing, and then given the AI boom that is just in its infancy, arguably, what about data or cloud center assets in India or elsewhere?
Great question, Sri. I think fundamentally, the most REITable asset in India has been the office sector, because that's where all the rents have really been able to allow us to distribute cash and run a REIT effectively. A REIT, for the uninitiated, has two main components. One is you have to pay out 90% of your cash flows, and you must have 80% of your portfolio by value be rent generating. The office sector has been the best sector for that. Logistics in India and warehousing are sectors that do have promise, but at this point in time, I don't think give you the economics to really go out there and build a REITable platform. So I don't think that's an area we really want to get into. We do mull over data centers sometimes, but at this point in time, I think given that we've just been able to sort of put together such a robust performance on distributions, on growth, and we're very excited by the potential and the performance of the office portfolio, I think we would sort of keep our energy and our execution focus on office for the time being.
Understood. Ritwik, your predecessor, Arvind Maya, had to step down as CEO last November after SEBI said he was unfit for the role. What reassurance can you offer investors that Embassy REIT is being audited, managed, and run in a manner that is consistent with fiduciary duties and shareholder interests?
Yeah, first of all, Arvind Maya's situation was most unfortunate, and from a personal perspective, obviously wish him the very best. Embassy REIT has always prided itself on the strictest form of corporate governance, and I think the situation that came to light last year was not at the REIT itself. And we want to assure everyone that the board, the management team, works for the interest of all our unit holders and every other stakeholder that we have. We're 92% held by the public. Your vote counts immensely in every single strategic decision that we make. There is the ability, we think about governance all the time, and I think going forward, we want to make sure that everyone, including our regulators, the public, and every stakeholder understands that we work in their interests.
Ritwik, I appreciate that answer and that response. We thank you very much indeed for your time and talking to us about the outlook and the strategy at Embassy REIT. Thank you. Ritwik Bhattacharjee there. All the best. Right, we are counting down to the market open.